Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. It's important to remember during times like these that the biggest investing superpower is staying calm when the rest of the world is freaking out. I would only add that, in my opinion, it's times like these that the most money is made or lost for the individual investor. Uncle Frank has to remind himself that when the herd is panicking, I need to stay cooler than a fan. I refuse to let greed or fear dictate what I do in the market. One of the most epic money managers of all time, Peter Lynch, said, "The stock market really isn't a gamble. As long as you pick good companies that you think will do well, and not just because of the stock price." That brings me to the heart of the matter. Have recent events changed the fundamental outlook for the stocks and/or crypto positions you own, or are you considering selling them because they happen to be down from where you bought them? If the fundamentals haven't changed in a negative way looking ahead, doesn't that mean the investments you liked last month are now on sale? If you think about it, stocks only go three ways: up, down, or sideways. That means 2/3 of the time you shouldn't be losing any money or value. Now, you could turn investing and trading into gambling if you want to, but if you add the fact that you could even hedge your positions with options or inverse investment vehicles, what we do isn't really gambling. When you place a chip on a roulette table, your odds stand at 35 to 1. That's gambling. I'm a position trader, so I invest in things that have some significant event in the future that I believe will advance the price of the stock or cryptocurrency. A new product, a merger or acquisition, approval by a regulatory agency like the FDA or FAA, a short squeeze, or capturing a new prominent customer. I'll take a position in such an opportunity, closely monitor its progress, buy the dips, write calls and puts, and keep an eye on competitors. Now let's apply Peter Lynch's view to my positions. Now, this is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. So, speaking only for myself, these are my 6 positions on the screen, and I didn't sell any of them. In fact, I tried to nibble at these prices on the dips. The only time I will sell one of my positions is if something occurs that changes my forward outlook for the company. For example, I've seen nothing that tells me recent developments will negatively impact Archer Aviation or Surf Air Mobility's businesses going forward, so I bought a little more of both. While tariff negotiations and trade disputes could impact Archer's ability to secure parts needed for manufacturing, I view the current trade negotiations as temporary at this time. Now, if I get wind of something that will stop or severely delay Archer from building its planes, or something that will keep it from receiving final certification from the FAA, I will quickly liquidate my position. Now, I also bought more XRP because I believe the end is finally in sight on the token's long-standing legal battle with regulators. While I'm disappointed that we won't be getting any rate cuts soon, which would benefit crypto, the view ahead for XRP has actually improved, not been diminished in my opinion. And that brings me to my quantum positions: D-Wave, Rigetti, or IonQ. I have yet to see anything that would convince me the immediate nor long-term future for quantum computing has changed. So while I didn't have the liquidity to add to these positions, I didn't sell any of them. At this time, I do not believe Trump's tariff negotiations, low consumer sentiment readings, nor persistent inflation from Friday's reading will negatively impact what I'm invested in for the long term. It's important to mention this is a speculative portfolio. This is money I can afford to lose. It's comprised mainly of higher risk growth stocks and one crypto position, and I see no reason to rotate out of any of them at this time. Lower stock prices are simply not a strong enough reason to bail on these companies. That's just my opinion. Okay, so let's get into it. What the hell happened and what's going to happen next? Well, guys, try to remember when you're doing your research that the financial media is no different than the regular media. This is what they want you to believe. They have an agenda to push, and what they don't say is typically more important than what they do say. So why do I listen to them at all? Because it exposes their motives. I will then review the facts and opinions and come up with my own game plan. We'll start with Wall Street breakfast. So Wall Street on Friday closed out a roller coaster week that began with an advance and ended with a sell-off. Tariffs remained at the top of the headlines as market participants geared up for April 2nd, a day that U.S. President Donald Trump has dubbed Liberation Day. His reciprocal tariffs will go into effect that day, along with a 25% tariff on auto imports announced earlier in the week. For those of you unfamiliar, tariffs on imports are designed to raise the price of imported goods and services to discourage consumption. The intention is for citizens to buy local products instead, thereby stimulating their country's economy. But in this case, they can also force companies to manufacture products in the U.S. to avoid our tariffs. Trump didn't invent tariffs, nor is he doing this to hurt our consumers, the economy, or the markets. He's doing this to secure better trade deals for the United States. Reciprocal tariffs only mean that the president is matching whatever tariffs you impose on the U.S. with one of our own. It doesn't matter if you hate Trump or love him. If you're Democrat or Republican, no one can argue that the press is fair to Donald Trump. So, for example, if Canada charges the United States an initial tariff on milk of 7.5%, and an over quota rate of 241%, and we charge them nothing, a threat of a reciprocal tariff might force Canada to adjust their rates to be more fair to our dairy producers. So here's the facts the press won't tell you, but Uncle Frank will. Canada has an average duty of 218% on dairy. If you think that's reasonable, you're an idiot. What the press has been careful not to mention is progress like this from earlier in the month. Made in America, Trump racks up $3 trillion of investments in the U.S. economy. On your screen is Trump meeting with the head of Taiwan Semiconductor. They've agreed to invest $165 billion in the United States, open a new factory in Arizona. That might mean 40,000 construction jobs alone. There's a businessman in the White House now. Isn't this better than arguing about transgender toilets? That question is for my friend Donahue George. But let's continue. Also, dampening market sentiment last week was a key inflation reading that came in a tad hotter than anticipated on Friday. They're talking about PCE, the Fed's preferred inflation gauge. The core personal consumption expenditures price index rose 0.4% month over month in February, compared to a consensus of 0.3%. On an annual basis, the index ticked up 2.8% versus an estimate of 2.7%. So that caused the NASDAQ to drop 481 points. Okay, for the week, the S&P 500 retreated 1.5%, while the tech-heavy NASDAQ composite slid 2.6%. The blue chip Dow fell 1%. Also, consumer sentiment hit lowest since 2022 as anxiety rises over inflation and jobs. Well, because of all that, treasuries soar amid mounting economic anxiety into quarter end. Treasuries rallied after data suggested U.S. economic growth is slowing, and falling U.S. stock prices stoked demand for bonds. Okay, so what does that mean? Rising bond prices in the treasuries means lower yields. That's better for mortgage and credit cards. But now let's get into what the press is not talking about. According to HedgeFlow, hedge funds are increasingly betting against stocks with NVIDIA, Advanced Micro Devices, and Tesla as their top 3 shorts placed on Wednesday, a Morgan Stanley note showed on Thursday. Wednesday was the 3rd largest day of single stock selling by hedge funds this year, according to the bank's institutional equity division led by the technology sector. Okay, so Wall Street is short, their biggest short of the year so far. I think that explains why Wall Street Breakfast failed to mention it. As it turns out, it's not just widely traded tech stocks that are being targeted. The shorts were busy elsewhere too. GameStop stock hit restrictions on the New York Stock Exchange after short volume rockets 234%. I'm not trading meme stocks right now, and I know we don't have an official SEC chair as of yet, but is anyone watching the chickens at all? Over 71% of all GME's trades were executed off exchange on Friday. Welcome to the Tijuana Stock Exchange again. Hey, here's something else Wall Street Breakfast didn't mention. The Fed urged to explore a hedge fund bailout tool for the basis trade. The Fed Reserve should consider setting up an emergency program that would close out highly leveraged hedge fund trades in the event of a crisis in the $29 trillion U.S. Treasuries market, and this is according to a panel of financial experts. Speaking of hedge funds and market makers like Virtu, it turns out Citadel's motion to dismiss denied in the NWBO lawsuit. Judge upholds ruling against Citadel and 7 market makers accused of spoofing NWBO stock. Discovery next, blue sheets to be turned over. Sounds like time for Kenny and Dougie Large to get out the checkbook. And a personal note for Donahue George, I would like to point out that Linda Powers, the CEO of Northwest Biotherapeutics, not only had the balls to sue Wall Street scumbags like Kenny Griffin of Citadel and Doug Sifu of Virtu, but back in 2018, she loaned the company $4.4 million of her own money. That's a lot more than that piece of shit Adam Aaron ever did for AMC. He doubled his own pay plan during the pandemic, and I hope he chokes in prison someday, just like Bernie Madoff. But I'm thinking about buying a little NWBO just to support the company. Al from Boston puts the chance of settlement at 70 to 80%. And transcripts reveal that regulators, FINRA and the SEC, were aware of manipulation in MMTLP months before the troubling delisting in December of 2022. The pressure is mounting, and the community is determined to seek justice. Shout out to my friend Frank Nez for the great tweets and coverage the financial media refuses to do. Just in, another company tackling naked shorting. Quantum Biopharma appoints Terry Lynch to board in fight against market manipulation. From Bloomberg yesterday, AppLovin hires law firm to probe short seller allegations. NRx Pharmaceuticals initiates strategy to combat short sales. Initiative is intended to protect shareholder value through continued compliance with NASDAQ listing rules and elimination of naked short sale positions in the company's securities. The company is contemplating a reverse split if needed to maintain NASDAQ listing compliance, to be accompanied by change in corporate name and CUSIP number. Wow, this all sounds wildly familiar. The company has retained former SEC enforcement leadership to notify leading brokerages of the need to close all naked short positions in the company's securities and to prevent future accumulation of naked short positions in the company's new security. A post from X Market News breaking: hedge funds, market makers, and brokers face discovery and subpoenas for market manipulation. Citadel, Virtu, UBS Securities, and more. Mullen Automotive moves to discovery in manipulation case against market makers and broker-dealers. Call me crazy, but I think we might be finally landing some punches, guys. And from last week, over 8,000 retail investors are demanding President Donald Trump to temporarily ban short selling. Investors are demanding a temporary ban to investigate naked short selling and market manipulation in U.S. markets. After I added my signature, they've got 8,679 verified signatures. Oh, you silver bugs are going to love this shit. In a recent interview with Liberty and Finance, veteran investor Rick Rule, CEO of Rule Investment Media and former CEO of Sprott Asset Management, delivered a stark warning to those shorting silver, predicting a potentially religious experience for those caught on the wrong side of a short squeeze. Rule, a renowned expert in natural resource investments, shared his insights on the precious metals market, central bank influence, and offered a glimpse into his upcoming Natural Resource Investment Symposium. Go check out the article for yourself at the Jerusalem Post. Don't worry, I didn't forget the gold bugs. Let's start 2 days ago. Gold hits record high as UF tariffs spark trade tensions. Wall Street keeps upping its bullish calls on gold. Gold price hits fresh records as Chinese insurers buy. London silver gets tight. And then today, China claims discovery of yet another record-smashing gold deposit. Why an analyst sees the record-setting gold rally headed for a 38% crash in coming years. Guys, this is not my area of expertise, so I'll let you make the call on when Wall Street is planning to rug pull you guys. But in the near term, gold could break in either direction following Trump's Liberation Day. Buckle up, because this could get volatile and out of control for both gold and silver. Okay, so here's the outlook for commodities. Tariffs and other Trump administration initiatives could significantly impact commodity markets over the coming days and weeks. After gold and copper rose to new record highs, silver looks set to challenge the 35.07 resistance level, which could lead to an explosive rally. Meanwhile, crude oil prices remain under pressure below 70 per barrel on the nearby NYMEX futures contract. The administration's quest for lower energy prices, the potential to end the war in Ukraine, and OPEC's production increases could send the energy commodity below the 63.57 critical technical support level, leading to a herd of selling. Crypto braces for huge surge after Forbes predicts $60,000 XRP price. According to AI, this is false news. Forbes never published any prediction that XRP will hit 60,000. The statement is based on deceptive social media and lacks any credible sources. Always verify before believing such sensational crypto predictions. But here's something I think I can believe. Breaking: according to Garlinghouse, the floodgates are going to open. Ripple is clear to target trillions in global payments. Massive for XRP. Guys, it's never been the hype pieces that kept me buying XRP. It's always been the facts from AI, Ripple's presence within FedNow's payment infrastructure. While Ripple itself is not officially listed as a service provider, likely due to its ongoing legal battle, FLR Moon's research suggests that 27 of the 37 FedNow certified service providers have some level of connection to Ripple. But now, Ripple, a prominent provider of cross-border payments and open source distributed ledger technology for financial companies that FedNow will utilize, may be included among the fintech companies that FedNow will utilize. You see how that worked? The appeal was withdrawn. The end is in sight. Will FedNow use SWIFT, the most expensive and time-consuming way to send money cross-border, or will they use RippleNet and XRP? You decide. The FDIC states that banks are allowed to participate in crypto activities without seeking prior approval. Guys, slowly but surely the gloves are coming off. The handcuffs are being removed. And I say the reign of inferior projects like Ethereum and Bitcoin are about to feel the full heat of XRP without being handicapped by regulators. Banks in India are conducting private ledger tests with XRP to enable efficient money transfers between banks. India is also a member state of BRICS. Now, this article from 2 days ago is one of the reasons I'm not surprised by this pullback in XRP, especially going into PCE on Friday when Fed Chair Jay Powell expected it to be elevated. XRP price prediction. This $244 million trading signal kept XRP below $3 in March. Ripple's XRP price steadied at $235 as $244 million in short leverage positions prevented XRP from breaking $260. Can bulls overcome this resistance? Well, now we know no. But drill down into the highlights. Short traders have deployed $404 million in leverage, outweighing long positions by 30% and pressuring XRP below key resistance levels. A $244 million short position cluster at 260 has repeatedly blocked bullish momentum, delaying a potential XRP breakout above 3. Okay, so now you know they're short. Now you know where they're short. But the best part about knowing their short positions is the only way out of that trade is to buy or cover. What development might be coming that could force their hand? Senior BlackRock strategist says XRP checks every box. We're just waiting for the green light, and there's the list. 18 potential XRP ETFs in the pipeline. So guys, I ask you, has this recent drop in XRP's price in any way diminished the impact of nearly 20 ETFs or the potential of XRP for 2025? Do you really believe BlackRock is going to sit this out or jump in with both feet? Make up your own mind. My favorite growth stock for 2025 was in the news this past week. Archer Aviation signs agreement with Ethiopian Airlines, but more important, Abu Dhabi's flying taxis are closer to taking off this year. A fleet of flying taxis operating in Abu Dhabi became more of a likelihood following confirmation of an agreement between the Emirates Aviation Authority and the firm behind the machines. As The National reported last month, Archer was working towards launching a fleet of flying taxis before the end of the year, viewing the Gulf as the perfect launch pad to demonstrate its vehicles to the rest of the world. Abu Dhabi Aviation confirmed on Thursday morning that an agreement had been made to deploy the first fleet of Archer's Midnight eVTOL aircraft this year. Quote, as a leading force in the aviation industry across the region and the largest helicopter operator in the Middle East, Abu Dhabi Aviation has the expertise to develop a scalable urban air mobility service, said Nadir Al-Hamadi, chairman of Abu Dhabi Aviation. Abu Dhabi Aviation will fund the development of the Midnight flying taxis, making it the first operator of electric air taxis in the region, according to a statement released on Thursday. The Midnight is a piloted 4-passenger aircraft designed to perform back-to-back flights with minimal charge time between flights. That's right, guys. We will be in the air accepting fares first. This is not going to be a pre-revenue company for much longer. Remember, I told you, this is not about a new aircraft. This is about a new way to travel. By the time you see these things in the skies of New York and Los Angeles, it'll be too late, in my opinion. This startup that's only been trading for about 40 months boasts a $6 billion order book. To me, this is like investing in the Staten Island ferry before New Yorkers ever thought traveling that way was even possible. I have a personal price target of $21 per share on Archer for 2025, not investment advice or advisor. Sometimes I wonder if you guys fully understand how ahead of the curve you are on Archer Aviation. Electric air taxis from Newark to New York City in 10 minutes. Archer Aviation and United Airlines planned eVTOL operations. Atlantic Aviation preparing Manhattan Heliport for electric air taxis. The FBO network is working on a project to install electric aircraft chargers at the East 34th Street Heliport in New York City. That was from October of 2024. Do you understand that you know this is coming and New Yorkers don't? They'll be able to fly from Manhattan to all 3 of the area airports in less than 10 minutes instead of driving. Have you ever drove to the airport in New York City? Do you have any idea what might happen to the stock price when these things are flying over the Big Apple? Not investment advice or advisor. One day soon, one of these will whisk people over traffic to a heliport at the hospital. And now the government is asking Archer and Anduril to build them hybrid eVTOLs for the military, which do not require FAA certification, I might add. So instantly, this $7 stock is suddenly a defense contractor. People, wake up and smell the coffee. Now, this is from yesterday. Regulatory filings show that institutional investors, also known as smart money, significantly increased their holdings in Archer Aviation in the first quarter of 2025. This post got under 250 views, guys. Even Wall Street will be caught flat-footed on Archer Aviation. They say a picture is worth 1,000 words. I put a little arrow highlighting institutional interest in this company's stock. I think word is getting around the smart money circles. You judge for yourself. Uncle Frank isn't the only guy out here that sees the potential of a strategic alliance with Palantir, a tripartite collaboration that will revolutionize aviation. Archer, Palantir, and Anduril Tech. Archer Aviation stock is the best pick of 2025. From Business Insider, VCs, that's venture capital firms, are in a frenzy to invest in Anduril, but good luck getting a hold of shares. Okay, so Anduril might file for an IPO. They're going to go public. They're going to raise a ton of cash. Now, I'm going to give my subscribers a big hint here. Not investment advice or advisor, but there could be a big sell-off coming up connected to Liberation Day. And maybe Archer will follow the market down. Archer is a strategic partner of Anduril, and the two of them just teamed up with Palantir. That's all I'm going to say. Okay, before we get to the events calendar and the important stuff, I want to put this to bed already, especially for you Trump haters. So if the $3 trillion in new manufacturing investment in the United States in under 100 days didn't impress you, maybe this will. Egg prices collapse. Here's Trump's response. Egg prices have significantly decreased in recent weeks, with wholesale prices dropping 47% due to improved supply conditions after recent avian influenza outbreaks. You know, guys, you'd be amazed how many more eggs the chickens will lay if you're not killing them. Increased egg imports from Brazil and regulatory adjustments by the Trump administration have reportedly begun stabilizing the market. The Department of Agriculture reported that wholesale egg prices have fallen from $8.53 to $4.08 per dozen in New York. Are you satisfied now? And I don't know about you, but I'm grateful the government won't be taking money out of our checks to send to Guatemala for gender reassignment surgeries. On January 29th, Doge said in a post on X that it had eliminated 85 contracts relating to diversity, equity, inclusion, and accessibility at more than a dozen federal agencies worth roughly $1 billion. It also canceled a $45 million scholarship program for students in Burma. So a hearty FU from Uncle Frank to all the people protesting Tesla dealerships today. Tesla employs over 125,000 people. Elon Musk created those jobs out of nothing, while the protesters key environmentally friendly cars they used to rave about. Pure genius. So stocks are on pace for their worst month since 2022. Could April bring some buying opportunities? Seasonality and bearish sentiment could create an opportunity for investors next month, but policy uncertainty still remains. Let's talk about April seasonality. Did you know in post-election years since 1950, April has remained a top-performing month, historically ranking as the second best month for the Dow and the S&P, and the third best month for the NASDAQ. But I don't care how well April has performed in the past, we ain't out of the woods by a long shot, and we don't know if things are about to get worse. We already know what's important about this coming week. It's Wednesday, April 2nd, Liberation Day, the day Trump tariffs are scheduled to go into effect. So what do we know so far? Well, we know Wall Street got nice and short last week. Wednesday was the third largest day of single stock selling by hedge funds this year. We know the press will highlight everything negative and ignore anything positive. Don't forget, Apollo Global Management owns Yahoo Finance. They are not on our side. They work for Wall Street. We know consumer sentiment is down sharply, according to the University of Moscow in Michigan. We know the Fed isn't coming to the rescue with any rate cuts because PCE was slightly elevated, and that would help the Trump administration. We know the media has turned tariff negotiations into a political football that has skunked the market multiple times. I don't see any reason why anything will change. I think the markets will use the tariffs as an excuse to sell off, and Wall Street may short it down even further. But there is one ray of hope. Trump has been hyping up Liberation Day, where he said he'll impose a round of new tariffs. His plans include reciprocal tariffs, tariffs on agricultural products, on goods from Mexico and Canada. Trump said that there's still flexibility with his plans, and he may not impose them all on April 2nd. So that means our trade partners have this weekend and until Wednesday to make a deal with the orange guy. If by Wednesday these negotiations are all buttoned up and it's all good news, then I think the market will rally sharply on the news. If we get a game of chicken and the tariffs go into effect, the media will paint it as a trade war and the market will drop. The media will discount or completely ignore any benefits from the exchange and point to how inflationary it will all become. Tuesday, April 1st, 9:45 a.m., S&P final U.S. manufacturing PMI. If it's good, the financial press will ignore it. If it's bad, they will shout it from the rooftops. Followed by job openings at 10 a.m. Wednesday, April 2nd, 8:15 a.m., ADP employment, followed by Liberation Day activities. We either have trade deals and good news, or we have a stalemate and a trade war, or door number 3, we have a mixed bag and the media will spin that bad. Thursday, April 3rd, 8:30, initial jobless claims, 9:45 a.m., S&P final U.S. services PMI this time. Friday, April 4th, is the next biggest event of the week, jobs data, 8:30 a.m., U.S. employment report and unemployment rate. If the jobs data is awful, that could put pressure on the Fed to cut at the next meeting, and the market might rally on that. But guess what? There is no Fed meeting scheduled for April. I've got the next one slated for May 6th and 7th. For my quantum stock fans, I have the D-Wave Qubits 25 conference Monday the 31st and Tuesday the 1st. So I'll be watching for any new news that might emerge from that meeting. Guys, try to remember, these trade negotiations can be very painful for the market, mainly because the financial media refuses to present both sides of the issue. But the end goal is better trade deals for the U.S., more jobs, which also means more revenue for the government. I believe the country and the market will come out the other side of this the winner, but expect extreme volatility, even more sharp sell-offs. The chart on your screen is titled, Tariff Uncertainty is Higher Than in Trump's First Term. Guys, I'm not saying this tariff dust-up can't hurt the markets, because it has, and it might hurt it even more. What I am saying is the media, especially the financial media, which works for Wall Street, knows when Wall Street is short, has blown this completely out of proportion. Trump has been president before. Trump negotiated tariffs before. Look at how much higher uncertainty is now compared to his last term. This is planned destruction, guys. They knew what Trump was going to do, and it all started at the WEF meeting in Davos with DeepSeek. Trump told you the globalists took down this market, and he was right. Now, let me show you something you guys may not know. Trump threatens tariff blitz on EU, Canada, if they work against the U.S. If the European Union works with Canada in order to do economic harm to the USA, large-scale tariffs, far larger than currently planned, will be placed on them both in order to protect the best friend that each of those two countries has ever had. Guys, look at the chart. Where do most U.S. auto imports come from? Mexico is number 1, followed by Japan, South Korea, Canada, and then Germany in 5th. Look, guys, this is how the tariff game is played. The next generation Honda Civic will reportedly be made in the U.S. as Trump tariffs add 4,000 to the price tag of Mexico-made cars. Honda was going to manufacture this car in Mexico. Now they're going to manufacture it here. Don't ever accuse Uncle Frank of running a hype channel. Legendary trader Peter Brandt issues XRP alert, warns altcoin at risk of witnessing a 50% drawdown. Seasoned trader Peter Brandt is warning that the payments altcoin XRP is at risk of going through a massive capitulation event. The legendary trader tells his 781,000 followers, on the social media platform X that XRP is forming a head and shoulders pattern on the daily chart. An H&S structure is a bearish pattern indicating that an asset has lost momentum to sustain its uptrend after failing to print new highs. According to Brandt, the bearish structure will be invalidated if XRP climbs above a key resistance level. Otherwise, he says XRP is in danger of breaking support at $1.90 and witnessing a waterfall event. Okay, so there's Pete's chart. I highlighted $1.90 at the bottom of that channel. So what do we know? Well, since you watch this show, you know there's a substantial short position at 260, and now you know the coin has more downside risk if it breaks $1.90. So far, the price has held over 2 at the time of this recording. If Liberation Day creates a sell-off, we'll be watching 190. This is some other bullshit we have to worry about. XRP price wobbles at 215 as SEC chair drama fuels investor uncertainty. Ripple's XRP is back in the hot seat. After a volatile week, the token is struggling to stay above 215 as investors digest growing uncertainty around the nomination of Paul Atkins as the next SEC chair. Don't forget, we already know no XRP ETFs will be approved until Atkins is at his desk. We also know the White House dragged its feet supplying the docs needed to even schedule the confirmation hearing. And we know they've approved Solana ETFs even though Atkins hasn't been confirmed yet. So if Atkins gets confirmed, I would take that as good news. But what's frustrating is bad news takes us down and good news takes us nowhere. Speaking only for myself, I believe XRP will finally have its day when the stink of the U.S. government and its asinine regulators is finally off the project. Well, Adam Aron is going to spend more money, more on CapEx, guaranteeing we'll never post a profit. CJ40 Plex and AMC Entertainment to bring unparalleled premium experiences, 4DX and ScreenX auditoriums, to AMC and Odeon moviegoers at 65 locations worldwide. Nowhere in the article does it say what this turd hunt is going to cost. But Adam put the company over $4 billion in debt his first year as CEO. He invested $1 billion in Saudi Arabia. I think he left with $30 million of it. Check me if I'm wrong. He spent $250 million on green projectors when we were over $5 billion in debt. He spent $100 million on soda machines. He invested in a bankrupt gold mine to pay down loans to 5 short sellers of AMC. He paid for a commercial that played only in theaters. He released a new popcorn line at only 1 store. He made the new branded credit card available to only A-list members. He was caught sending nude images of himself engaged in a sex act to a stranger. The only guy I know that didn't get canceled. He gave half the company away for a penny dividend when he could have sold those preferred shares for billions and then reverse split the stock when it was in no danger of being delisted. Cinemark has never split its stock in its entire history. All I could tell you is this pig's day is coming, and I can't wait. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.